Just to give you an idea, the 5 fintech trends we're going to cover are very focused on retail lending and wealth management. So if you logged in today wanting to hear about blockchain and Bitcoin, you are in the wrong webinar. We're going to focus on consumer, retail lending, wealth management, all that customer-facing stuff that the banks are doing. So you can see the 5 trends on your screen that we're going to cover. But I don't just want to cover them in isolation. One of the key points of these trends is that they are interesting when they're integrated. So let's go back to a use case. So let's take an example use case. Let's say I want to go on vacation. I have an Alexa in my house, which is a voice-activated device, if you're not familiar. And what I wish I could do is just say, Alexa, I want to go on vacation. Now, at the moment, if I want to go on vacation, I would have to log into a travel planning website like Travelocity and Kayak. I would look at the reviews. I'm currently in Singapore, so I try to figure out what direct flights are available because I don't want to make a connection. And then I'd remember, oh, I have some miles on Emirates and Thai Airways and Singapore Airlines, so which one do I have enough to go to a place I want to visit? Oh yeah, and I have some airline loyalty points, etc. So I'd probably log into all those different accounts and check my points. I don't know about you guys, but in the past, I've actually kept this organized in a spreadsheet over the years to see, so I can see at a glance what mileage I have, etc. But say, well, do I have enough money to go on this vacation? So then I'd log into my DBS account. I might be using a personal financial management app such as Cuber, which I'm using to gamify my savings so I can save for that vacation. I'd have to log into that and see how much money I've saved and how long it'll take me to save enough for the trip. So if I really did this and wanted to optimize this myself, it'd probably take me a whole weekend of work to work it all out. And then I'd really need a vacation when I was done figuring all that out. Now, we're talking about retail and consumer lending, but at the end of the day, you have to think about your customer. They don't really care about banking. They just want to go on vacation. They want to save money. They want to buy a house. So when you can connect with your customer at that level, it's a game changer for you. So think about the future state, and this is not far away. So this is not really that futuristic if you haven't thought about this use case. Soon I'll be able to go home from work, walk into my house and say, Alexa, I want to go on vacation. And using machine learning and artificial intelligence, she will pull together all of those data sources. She'll pull together the data sources on my preferences, where have I traveled in the past. I can tell her things like I want to only nonstop flights, how many days. She might be able to check my work calendar to see which days I'm free. She'll know how much money I've been saving, and she'll say, well, I have 3 options for you. Michelle, you haven't been saving enough, so you're going to just have to go to Phuket and use your free hotel points and stay there for 3 days. That's all you can do. Or option 2, if you wait a couple months and you save a bit more, maybe you can go to Bali, etc. So that's the kind of use case, and you can imagine the type of machine learning that's required for this kind of use case. So keep that in your mind as we go through these trends, because if we go to the next page and see the trends, in my view, they're not that interesting in isolation. I mean, they sound cool and they're buzzwords, but as a customer of a bank, I don't really care. I just want to go on vacation. So for each of those 5 trends you just saw, we're going to cover 4 topics. I'm going to just make sure you know what it is, that it's a big trend in the industry. I'm going to give you example use cases from around the world that we've seen. I'm going to highlight a few business and career implications you might want to keep in mind. And then I'll give you a few suggestions, what you can do in your own life, both in your career, your learning, and at your job to leverage the trend. So let's start with EKYC. So EKYC is really important because none of the stuff above happens until you know your customer. They have to authenticate, they have to log in, etc. So even with the above example with Alexa, I need to be authenticated to all of those accounts. So I need to be authenticated into my bank account. The bank has to have onboarded me to have my data, etc. So the magic of the new EKYC capabilities is that from the customer viewpoint, I can just either through voice activated, facial recognition, a fingerprint, be authenticated to those multiple data sources. So that's a critical enabler here. None of this works without the EKYC stuff. So you just have to be mindful of that and really make sure that you're adopting that at the right pace so that you can kind of get to where you want to be. Okay, so this was the Alexis slide I was mentioning, and you can see all the different types of data and companies with, for example, Travelocity and Kayak, my Emirates Air Points that I'd like to use, my bank account from DBS, Cuber, which is my personal financial management app, and you can see there how I'd want all of that to integrate into Alexa in a voice-activated way, okay? So the 5 trends, which apparently were not revealed to you until just now, that we're going to cover are EKYC, mobile first, big data, machine learning and AI, and finally cross-vertical integration, meaning integration across different industries. As I mentioned just now, the 4 things for each of those trends we're going to cover. I'm going to just explain what it is as a trend. I'll give you some example use cases, tell you the implications for both your job and your career progression, and then finally a couple tips that might help you use that trend or use it to your advantage. So back to where I was, hopefully you see an EKYC screen there. And as I mentioned, EKYC is using something that is electronic. So we're trying to get away from signing things on paper, long passwords, etc. Okay. And aside from those biometrics, those of you who are in India will be quite familiar with the Aadhaar system that you guys use there using biometrics. But the other enabler for EKYC is called an API, if you're not familiar with it, the application programming interface. And you'll see on the screen just a simple graphic of how this works. So I'll give you a really silly example of an API. If you've ever been at Starbucks or a coffee shop and you want to log into their Wi-Fi, it says you can log in with Facebook. And that's because Facebook has an open API, which is what you see there as the gear wheel. So you're sitting in Starbucks and you are able to use that open API, which allows your device to authenticate through Facebook, which you've already authenticated before. And the backend systems are all of the Facebook data. So the important thing to think about, which relates to the next part of this presentation, is that whatever public Facebook data that you have is now provided to Starbucks as part of that API authentication. So for example, we did a gamified financial literacy game in Brazil that was mobile, and people could log in through Facebook as their authentication method. And it was interesting because then all of their Facebook data was sent to us, not all, but their public data was sent to us. And it was a fun experiment for us just to see what the data looked like and how much was public, which surprised me. So that's something to keep in mind, that it's important because you have to get the data from A to B. So it's kind of a basic, I don't mean to disparage an API, but it is kind of the plumbing. It moves the data. So let me give you some EKYC use cases, which are really important. Capital One, you see that logo at the bottom left. That bank is in the US and they already have an Alexa API. So it's an open API provided by the Alexa tech folks, and you can authenticate your Capital One credit card. So when you walk in the house, you can just say, Alexa, pay my credit card bill. So that's an example of the power of the biometrics, the API, et cetera, working together for the customer experience. If you've used Apple Pay, you should be quite familiar with being able to log in using just your fingerprint, et cetera. I'll give you a personal example of mine, and it is kind of a good and bad example at the same time. I'm a customer of DBS here in Singapore, who's one of our more advanced technology banks. And the interesting thing is that they have a mobile banking app, of course, and of course I could use their website. The interesting thing is that it is actually much easier to use the mobile app than the website, and especially for approving transactions. So what we figured out, their customer service people gave us the hint. They're like, oh, actually set up the payments on the website, but approve it from your phone. Because if you approve it on the website, it requires several more steps. So for me, the key thing is on the phone, I authenticate with my fingerprint on my phone pad to authenticate, whereas on the website, I'm going to have to type in a whole series of numbers, etc. Right. So this is an example of where we see leapfrogging of the mobile applications moving forward because of that biometric capability. So here are some business and career implications. Number one, whenever you move to another technology, you will introduce new technology risks. So you have to be realistic about that. And the best way to approach that is to have an active bug bounty program. So in your company, if you're launching these things, have an active bug bounty program, which means that you put out into the public sphere saying, hey, if anybody finds a bug, we'll pay for it once we verify the bug. And it works really well because it kind of crowdsources people trying to find any holes in your system. There's a little screenshot of a video there for you, and you'll see the link. And by the way, we'll make sure these slides are posted on SlideShare and my LinkedIn and on our Twitter at FinTalent, so you can get to all these links later on. But that video, it's really long, but if you're not familiar, if you're not comfortable with technology, if you're not sure what APIs do, you have anxiety about bank security, this video is an amazing journey of a college student in Germany who was able to hack N26, one of the most famous digital-only banks in Europe. And he walks through systematically what he did and where the failure points are. So it's actually quite funny to watch and entertaining, but it's also incredibly educational. So these are the kind of things that you can watch to learn about these things. So enjoy that YouTube video later. And in terms of life hacks, first of all, you need anyone on this call, I don't care what your job is today or in the future, you need to understand how APIs work. Fundamentally. I mean, you don't need to be able to write them or be an expert. But for example, on my team, the person who handles our marketing function, she's not a technologist, she's not a programmer, but she is excellent at setting up APIs. And she sets up APIs, for example, with a platform called Zapier. You can use Slack. And so, for example, if we enter an update into our CRM system, it's automatically zapped or sent via API over to a Slack channel so the team can see the entry. Whenever our server is down, there's an API that sends that in a message to Slack so the whole team knows about it. So it's just like the basic functionality of how life works these days. So it may seem a bit boring, but hopefully you can have a little fun setting up stuff and testing it out to learn about it. And of course, test out stuff for yourself. Test out all these different payment mechanisms for yourself and see how it works. And keep track of all these new technologies. There are some great some great podcasts that you can listen to. For those of you who have long commutes, I can suggest London Fintech podcast and Fintech Insider, which will keep you entertained during your commute, and you can learn a lot about the latest technologies. Let's talk about the second trend, which is mobile first. So you may say to me, if you all were chatting with me in this room, you might say, Michelle, mobile's been around for a while. I can't believe that you're highlighting this as a new trend. Well, what we're seeing is that until now, banks took their website and they just reframed it into a mobile screen. That's not what we're talking about. We're talking about the data. We're talking about the mobile apps working together. We're talking about capturing the unstructured data from other apps. So So we're talking about the whole approach starting from the phone. So moving in the opposite direction. So we really need to rethink that. And I think the move of the customer behaviors towards a complete mobile approach is really changing things. And some use cases you should pay attention to. Those of you who are in India may know about DBS, who launched a digital-only bank, no branches, etc. But they were late to the game. I mean, for a long time, we've had N26 Bank, who I just mentioned, and Monzo Bank in the UK. And N26 and Monzo, I would suggest are two that if you're not aware of those two banks, you should probably put them in your newsfeed, follow them, understand what they do, because they are truly disruptive, fully digital banks. And when they do something, they fundamentally do it differently than a bank would do it, because they really start from the mobile experience and use all of that data. So what are the implications? Of course, the NFC, the near field communication capabilities of the smartphones really are game changing, because back to EKYC, I can authenticate on my phone with my fingerprint, I can tap, wave, etc. So the phone becomes the device of choice for all of the customers, right? And we want to make sure that we can design for all types of screens. So you've got to really keep that in mind. And of course, you also have to design for smartwatches and wearables, which is also going to continue to be a huge trend, because the NFC and the point of sale machines where you can tap and wave are now incredibly helpful with a smartwatch. Having a smartwatch before, when they first came out, may have not been very interesting. I mean, at least I wasn't interested. Like, I've just taken my email and stuck it on my wrist. But now that I can tap and wave with my smartwatch, and unlock my apartment door and things like that, it becomes very interesting. And we'll continue to see the user behaviors changing. Under the business career implications, I just want to highlight you need to really understand data privacy laws. And I say that because, for example, in different markets, there are different rules about, let's say that you put your app on the person's phone. I don't know if you guys are aware of this, but you can gather all this different data from other apps and from the phone itself, not just the data that goes through your app. And in different markets, there's different acceptable norms, both from a societal perspective and a legal perspective, in terms of what data you can capture from that device, right? That, for example, the geolocation data, which you can typically capture, but it may or may not be okay from a legal or societal perspective where you're working. So number 3, let's get to big data, which I suppose is probably the big elephant in the room and really driving all of this. What surprises me, and some people aren't really in tune with the true meaning of big data. Big data doesn't mean the data is bigger. It doesn't mean that the data set's just bigger. So some people thought big data just means, oh, I have a lot more of the same data. The differentiating thing that makes big data special is that, yes, it's voluminous, but it's complex. It's unstructured. So a lot of big data is very unstructured. For example, geolocation data is unstructured fundamentally, versus in the financial sector, you are always used to seeing payments data, which is very structured. So that's a game changer. And people have varying definitions if it's 3, 4, 5 dimensions, but volume, variety, velocity, and now they're adding veracity and value to that. So we'll see a picture of that in just a second. If you can, this is really small, and the link will be in there when if you go and download this deck. But this is from IBM, and if you just typed in IBM, the 4 V's of big data, I'm sure you'd find this right away. But I just want to show you this to really get you thinking about the true meaning of big data. And I think the biggest mistake people make is they, don't mind the pun, they don't think big enough when they think about big data. So it's obvious at the top left, we have a huge volume of data. So I think that part's pretty obvious. below that velocity, I think that's something we need to remember, that now we see a lot of data generated very quickly. So for example, if I think about my own telephone, I'm generating data constantly from moving around. I'm generating geolocation data. I'm generating my PayWave tap and pay data. I'm generating social network data. I'm generating my banking data, and so on and so forth. So the movement towards all the data-driven devices, you can imagine, increases that velocity. But from a financial services perspective, I would suggest that over on the right side, variety and veracity are the two more important trends that we really need to think about. And the variety is that in the financial sector, we tend to have blinders on, thinking, yeah, I'm going to get credit bureau data and payment data, et cetera. But I'll give you a few examples of crazy things that come out of variety. Number one, they did a study and found that people who keep their phones charged and topped up all the time with the battery tend to be better credit risks. So that's a true unstructured data point that we can see, right? In the Financial Times earlier this week, there was an article that had one of the strongest correlations I've ever seen to predict the economy and consumer confidence. A strong leading indicator for the economy are the rate of women's pregnancies, with the hypothesis that when families feel much more optimistic about the future with consumer confidence, they're more likely to be ready to have a kid. And the data correlation was amazing, and it was a very strong leading indicator. So that variety of data is now starting to become at our disposal. So that's really important to be creative, which is fun. And finally, of course, veracity. Remember that when you have multiple data sources, you now have the opportunity to verify that data. So I can compare the different data sources. So if a person claims their income is something, I can also see what their spending patterns are, et cetera. So I can use this variety to my advantage. So let me give you an example of big data usage. And I'm specifically not going to use an example from the financial sector. To be honest, we have not done a great job leveraging big data in the financial sector. In the e-commerce and the commerce space, they've all done a great job of jumping on this. So the Starbucks example, right? They have, in this case, 17 million active users of their app, and the Starbucks Rewards customers is 13 million. Now, that might seem small in terms of Indian or Asian population, but in the US, that's actually a decent size population to start working with. But because they got these Starbucks customers to start using the app, they started having them use it for their payments and get discounts, et cetera. They were able to capture which customers went to which stores, what their preferences were. The customers can pre-order their coffee, walk in, pick it up, it's already paid for. So the customers were happy, the customers were feeling more loyal. They also were able to track the KPIs by store, understand the purchasing behaviors. But the interesting thing is, and that seems like a no-brainer, but the interesting part is that from all of that data, that is how they determine where to open new stores. And that's why you'll actually see two Starbucks very close to each other, because based on that data, they'll realize they can open a second store. So the way that they've used this data has been really interesting. And it actually is a fintech use case to the extent that what they did is include payments in there. So it's actually a wallet. And by setting it up as a wallet, that brings a lot of opportunities. And I'll talk about that more in just a moment with another use case. So with big data, I think the business and career implications are enormous. And I think the challenges are still there. We work with banks around the world, and their view right now is that they've done a lot of work to gather the data and to start to look at it, but they feel that as a bank, they're just not getting the ROI yet. They know they will, but at the end of the day, they just have not. I haven't talked to any bank, and we work with the biggest banks around the world, which you can imagine, and none of them are satisfied with the ROI they're getting from saving and using all this data. And while capturing the data storage, that's been going pretty well. I think the analysis and visualization of that data has been very difficult by nature. So that's where all of you come in. Huge opportunities there, and I think we really haven't even begun that. And once you can do more data visualization and queries and look for correlations from that variety of different data, then you can do A/B testing. For those of you not familiar, let's say you have 1,000 accounts. Half of the accounts you take one strategy, half the accounts you take a different strategy, and you compare the results head to head to see which strategy worked better. So with big data, you have lots of opportunities, but it's time consuming to do all those tests and compare the results. Right? But you want to tailor those discounts. So you want to target people. So these days, right, because we have geolocation data, if I'm walking past a Starbucks, I'm sure I'll start to get the promotion popping right up on my phone saying, there's a Starbucks in 100 meters. Wouldn't you like a coffee? And at some point, customers will just expect it. They'll be like, how did I walk by a Starbucks and you didn't give me a promotion? What's wrong with you guys? So I think customers will come to expect you to anticipate their needs because they know that you have all their data. So if you don't, then they'll go elsewhere. And that, of course, applies to the banks as well. So some life hacks to consider. In my career, I've typically used SAS, and we've seen a shift from SAS to R and to other visualization packages. And one key reason is that people need to use packages which are very capable at doing more of the machine learning type of algorithms and handling unstructured data. I know SAS has made advancements there, but I think R has really catered more to that. Through the open source creativity. And the other game changer to keep in mind is that in the past, banks, a lot of the big banks did not allow anyone in the bank to use open source code. They viewed it as a huge risk. And that has changed. So for example, Wells Fargo is a bank that in the past would have not allowed open source code to be used, and now all their teams use R. So that's a big game changer. So that becomes an incredibly valuable and monetizable skill for you. Now, please, I beg you, stop overusing that Excel graph button. If you find yourself using that Excel graph, you're not being creative enough. You're not using radar charts. You're not using three-dimensional spaces. You're not, doing things in a more creative way. And when we teach workshops on data visualization, we really struggle because people really have this reaction to just go looking for that button to hit the Excel graph. And we really need to open our minds and get away from that. So watch yourself next time you go hit that Excel graph. So now that we have all this big data, we're going to have to throw machine learning at it. One of the key differentiators with big data is that there is variety, it's not structured, so traditional analytics techniques will not work. So those of you who have done, linear regression and stuff like that, it doesn't work on big data. You're going to have to use different techniques. Now, looking at this page, when we say, what is machine learning and AI, let's start all the way over at the right, expert systems. So you may be familiar with rule-based systems, if A, then B, and maybe you have a tree in there. So for example, right now, maybe I could program my Alexa for my vacation saying, I have a set of rules. I only want nonstop flights and I want to go someplace with a beach and this and that. So I could give a list of rules. And of course, when you use those travel websites like Kayak, that's also a rule-based system. I put in my filters. So those filters that you use are a little bit of rule-based automation. right? So those are heavily used now in the financial sector. They have been for many years, right? Now, if you go over to the left, right, now we talk about machine learning, and I'll show you some examples of this in just a moment. But the key thing about machine learning is that we can have a supervised and unsupervised learning. So within that machine learning, right, if I have data and an outcome, I can do supervised learning. So when you used to study for your math test and I gave you a bunch of problems that already had the answers so that you could check and see that you could get the same answer, that is supervised learning because I give you the question and I give you the answer. So that is predominantly what is still done, and it still works great. You probably passed your math test doing it that way. The big what if is when you don't have the outcome. So cluster analysis is a great example where there is actually not an outcome. I'm just trying to classify accounts into similar groups. So let's say I did a cluster analysis of all my credit card customers. I might end up with clusters that were like a soccer mom versus young professional versus new retiree versus student. There's no outcome variable, but there are different. It's a way to describe and classify groups because there's not an outcome I'm trying to predict. Now, artificial intelligence is the next step after this, where Alexa will start to anticipate. So, for example, in the future, if we have artificial intelligence for my vacation example, Alexa will say, Michelle, I noticed in your sleep data from your Fitbit that you're not sleeping well. And your exercise has also been dropping. I think you need a vacation. So Alexa putting together those pieces for me and suggesting I need a vacation, you can imagine is going to be a much tougher analytic problem. But for now, frankly, I'm pretty happy if she can just optimize that using machine learning for me. So here's just an example I want to give you guys from China. The link here is at the bottom, so when you get the deck, you'll be able to go read this. The academic paper about this case is really interesting, and I recommend you have a look at it. If you're not familiar with the fintech space in China, it is an incredible thing. And for example, one of my former colleagues is now the CEO of a company called Dumiao. And with Dumiao, they do point of sale lending, which I understand you guys, we do that here in Southeast Asia a little bit. I understand it already exists in India, and I suspect it's probably coming to the Middle East if it's not there already. But in point of sale lending, let's say I go buy a big screen TV and I'm at the big box shop and I want to check out, and I pull out my PayWave that has, or my Apple Pay or whatever, and I wave over the point of sale. The point of sale will then pull in up to 20 different data sources from my phone. In the China case, it's going to pull in all my Alipay data, etc., and offer me EMI or easy monthly installment payment for that item. And the lender will never have met me till that moment. There's just so much data in that phone that they can lend based on that. So it's quite amazing the approach that they can take. And it's all about that mass of different data sources. So if you look at this little summary picture gives you an idea. If you look at the verticals in the center of the screen, just want to highlight that the person, let's say from your phone, you have your financial activities, right? Your payments, your credit card payments, your debit card payments. Your other activities could be your interests or what you do with your free time, etc. If you're in doing charity work or in some clubs or what have you. And finally, we have our e-commerce activities. So that will be all the different ordering, Amazon, etc. So all of that data is available together, right? So the first thing is that I use it to personalize and recommend something for the customer. But of course, on the finance side of the equation, I'm verifying the customer. I'm predicting their credit risk from all that data. And of course, from back to the EKYC, I'm doing my fraud detection, right? So this is a game changer, and it is this way to aggregate across. Now, for those of you who didn't follow the news item, you may recall, I don't know if you saw it or not, Amazon in the US did a crazy thing some months back. They purchased a grocery store chain. And when they initially did it, some people were really mystified. Why would Amazon buy physical stores? And they don't even want the stores. They don't care. They want the data. And they wanted that data because they wanted that additional e-commerce activity of people in the stores. And the first thing, by the way, that they did, if you go read about it, was do A/B testing. Not all the customers were thrilled because they started moving stuff around in the stores, but they started doing A/B testing on their customers' behaviors. So back to the financial sector in terms of how we're using machine learning and AI. What we're seeing is the biggest ROI is coming from the marketing models and the risk models. Of course, neural networks have been used for many years in fraud models in terms of, for example, credit card fraud. So that actually is, I mean, it's more than a decade, 15 years at least, where that is business as usual for fraud models. But I think in marketing models, we're just at the beginning. One of our clients told me that from the marketing model side, they at any given moment they have over 1,200 active machine learning models in production. And they're using those machine learning models to identify customers, to make offers to them, to tailor things, and to communicate with them. So that was quite amazing, and that particular bank is a bank that I'm not sure that they had built a machine learning model until very recently, and they certainly were able to leapfrog. Now, finally, over to risk models. Just a cautionary note. These typically are heavily regulated and under the oversight of the audit team, the risk committees, etc. So typically, we may think about using machine learning for segmentation, and we still may use standard techniques for those risk models. So just a word of caution there that the big ROIs are usually over here at the moment, and for those risk models, I'm not sure the value of running afoul at this moment with regulators and auditors and the like. And of course, in machine learning and AI, here are some use cases for you guys to go and look at later, but look at the different verticals. The EDF example, using machine learning to help people reduce their home energy consumption, right? Tesco is working with Google Home to help people order when they run out of something, right? Virgin Holidays, you can imagine Virgin is doing a lot with all this unstructured data to target offers, etc. So it's sort of never ending. Some people, you may be familiar, are even a little critical of Uber for overusing this kind of machine learning to do all their peak load pricing and things like that. So let's talk about the implications. First of all, I think that the key business implication is that what we may have done in the past with linear regressions, with segmentation, and with different types of decision trees, once you introduce multiple data sources, the classification that we're talking about, that prediction, we can do that in a much richer way. So you can rethink that once you have multiple data sources. If you don't have multiple data sources, if you're still just using, credit card payment data, there's probably no reason to throw all this machine learning at it. But once you integrate all those different data sources, it's certainly time to go have a look at kind of this laundry list of things that you could do. In terms of life hacks, first, just go back to the numbers. create descriptive statistics, look at graphs, do some data visualization, really try to understand what you have, what data is there. The second, I really want to stress, look at other industries and markets for examples. There's no shortage. There are so many cool things being done out there. And don't necessarily just, if you're in the financial sector, look out to other industries such as e-commerce, energy, medical, etc. Now, while everybody thinks that artificial intelligence is such a cool buzzword, to be quite honest, it is rare that we're going to be using machine learning at the moment in the financial sector. There are a few applications, but at the moment, if you can just succeed at using straightforward machine learning techniques, which by the way have been around for decades, we just have very good and varied a variety of data. But using standard machine learning techniques, there's really no need to get too cute. You can do some fantastic things, and you can do them by doing A/B testing, by doing good data visualization, etc. So to get that ROI, you don't even really need to get that sophisticated. You just want to bring together the multiple data sources and use something like this, something from machine learning, an SVM or whatever, and get a really good result. Now you may say, okay, Michelle, but which technique? You just gave me this laundry list. How am I supposed to know what to use? You'll see a link at the bottom of this screen. This is from Microsoft. This is hard to read, but if you go find the original source one, you'll be able to walk through it very carefully. But you'll see this start button in the middle. And the first question to ask yourself is, what do I need to do? So for example, if I want to predict a category, so for example, I want to predict 2 categories of customers, I can go down here and see the different types of machine learning techniques that I can use. If I want 3 or more categories, I can go here, so on and so forth. I already mentioned doing clustering, which is discovering a structure. So there are easy ways to really determine that and then just pull in that particular technique. Now we have the cross-vertical integration. So the key thing is that remember when we talked about big data, the big important thing that we saw happening is that you have many data sources that are varied. And of course, you get that by doing cross-vertical things. So I just mentioned the Amazon case where Amazon went and bought a grocery store because they wanted the data. Grab Taxi is one of our biggest grab and ride programs here, the ride hailing app, and very predominant in Southeast Asia. They have added a payment function. So you can use the ride hailing as a wallet. And of course, they keep throwing all these promotions for people to put money in the wallet. Why do they want me to put money in the wallet? Because they want to watch my spending patterns. And I'm very valuable as a customer if they then understand my spending patterns. They can do a lot with that in the future, and kind of every bank will want to talk to them if they understand my spending patterns. And of course, this is the Alipay case, who is now taking over the world because they figured out this whole data is the new oil some time ago, right? So you want to look for these cross-vertical opportunities. So here we have implications. The first thing is, if you're working in a bank or NBFC or in the financial sector, you really want to be looking for corporate partnerships, which are data gold mines. And when you draft the agreement, make sure that you're able to monetize and utilize that data in an important way. So no longer is it just that you have your airline miles card with the airline. You really want to be able to mine that data and get some value out of it. And much more so in the past, the financial sector needs to watch what might seem like silly consumer trends, but they're driving banking behavior. So how quickly are people moving to wearables? That will inform how quickly the bank needs to have a wearable app for the banking app. Where are people shopping? That will tell you who you want to partner with and get your data from going forward. So all those just ongoing consumer trends are critical. And a couple life hacks: you need to really think outside the box, be creative. Creativity is now rewarded, because if you can think about how to integrate all those data sources, and think of new correlations to look for, and do that great data visualization, you'll get the ROI out of the big data, right? And my hack for you, I mean, I don't know about you, but on my phone, on a regular basis, I'll download 5 new random apps, like whether it's a e-commerce app or a banking app or a shopping app, and test it out just to see how it works. And then I probably delete 3 out of the 5, and then delete and add a couple new ones. But I'm constantly testing those out to see how they work, what the features are, what's the user interface, what works and what doesn't work. Now, finally, let's get back to Alexa. So at the beginning, we talked about how I'd go home and say, Alexa, I just want to go on vacation. So now think back through the 5 trends that we were highlighting. We've got, on the left of this screen, you've got the search engines for travel. You've got your airline miles, etc. From all different airlines. You've got your bank accounts, you've got personal financial management apps, you've got trading apps. You've got something like Acorn, where you take your spare change and put it into an investment. So now the bank, whoever's pulling this together, has the investment data. So take a step back and think about your current job. Whether you work in a credit card portfolio or in analytics, how is it that you can start building this out? Because at the end of the day, the guy who can integrate all of this, whether it's the bank and you work within your teams in the bank through partnerships to integrate all of this data, that is going to be the model that's going to win. We did a Fintech product brainstorming workshop with a bank in Asia, and people were trying to think of fintech innovations they could introduce in their bank. And at the end of it was a 3-day competition to design new products. And at the end, the one that won was a travel planning platform, because they realized that was all that would lead them to the more affluent customers. It would give them spending, saving data, etc. So, and there's not really a lot of technology. It's just a bunch of APIs and really integrating data. So that data skill set becomes critical for success in terms of that use case. So let's go back to those trends. EKYC, right? Mobile first, big data, machine learning and AI, and the cross-vertical integration. Now, as I mentioned, these are huge trends, but in isolation, in our opinion, it doesn't get you there. You have to integrate, you have to combine all those pieces and get a use case. So if you're talking about, there's this cool data and I want to use the data from our partner, from the retailer, start with the use case and think about how you'll integrate everything. So let's say you're at a bank and you've got a partnership with a big box retailer who sells big screen TVs and this and that. Start with the use case. What is it that you can do to leverage that data, whether it's to offer loans to your customers or give them loyalty points, but really think about how to put all those things together, and leverage the partnership and the data. And we see fantastic examples of that. And think about it both in terms of your business and I would suggest for your business implications, this is, what tools can you use? Can you introduce new data visualization techniques into your bank? Do you want to bring in different data sources? Do you want to experiment with new product offerings and do some A/B testing with your customers? And then in your career, I think that if you've got to really be conversant in, if you're not technical, that's great. There's so much work to be done in product design and data visualization. But if you want to go a technical route, really having a deep understanding of how to leverage machine learning on this data is going to monetize it for whoever you're working with. Right? So in terms of what's next for you, I just want to urge you, don't use machine learning and big data for the sake of it or because it's a buzzword. You need actionable insights, which go back to that use case. So you really need to walk away saying, what was the actionable insight? So for example, the silly one I told you, that the guy, if somebody keeps their phone battery charged up, they're more likely to be a good credit risk. It's an actionable insight. If you can get that data from their phone, from your banking app, that's actionable. The credit risk team can use that as a piece of information about that borrower. It's silly, but if the data proves it, then we can take action on that. So make sure that the insights you come up with are actionable from a product marketing or from a risk management perspective, and that will lead to all these new product approaches. Okay. And for you, what else? I think there are enormous opportunities and a shortage of skill set in all of these areas. Now, when you download the deck, you'll see I've given you all of these different links. So in terms of a life hack, I mean, enjoy reading through all this stuff. Use your commute time to listen to podcasts. Use that time to really stay up on this stuff and read about cool use cases. I can't recommend enough to go read about some of the examples in China. Because they have, I think in China, what they have done is, in terms of those 5 trends we just talked about, I would say they really have had some great use case and success cases integrating across verticals. So for example, WeChat being able to leverage all the data in your phone to use WeChat to offer you a loan, to pay for things, to do loyalty, etc. Really has been a very good case to use as reference. So those links will be there for you. And here's me. You can always find me at michelle@portfolio-quest.com and our website, fintalent.com. And of course, you can find us on YouTube, Twitter at FinTalent. You can follow me on LinkedIn because I am always posting different stories and use cases. You may notice that a lot of this simply comes from our news feeds, all these great examples, and talking to our colleagues around the industry. So with that, I will stop just before the hour. I don't see any questions written into the question box, so I will refer back to Imarticus if they're ready to wrap up.
All right, Michelle, there's a question: how fintech impacts investment banking and wholesale corporate banking sectors?
Great question. How does fintech impact wholesale and commercial sectors? Of course, we probably could spend another hour on that, but I think that yes, we see in the wholesale and commercial, we see a lot of automation. We see a lot of RegTech solutions being utilized there. And also, if you look at MiFID, there are a lot of changes in how research is being done and being regulated. So there's a company called Smart Karma, for example, which is doing really interesting things on the research space. So we see huge impacts there, but they're very different, right? This retail and consumer side is very big data driven, whereas I think the wholesale commercial side, there's a lot of process driven stuff, and obviously some of the machine learning is being used for predictive analytics for probably longer. I think they've been at that longer than we have on the retail side, quite frankly. So at the moment, the future-looking trends are probably more around some of the RegTech things that we're seeing and around research, such as you can reference Smart Karma as an example of a company doing that.